When I was starting the podcast, I was leaving a job, still relatively young, right out of college. And there was a lot of doubt. So people around me mentioned that, hey, why are you doing a podcast? Why aren't you monetizing the podcast? This is about 3 years back. I used to do my Zoom videos with actually video off, by the way, because I used to be so nervous. Formalize the vision to say that, hey, we will stand for authentic, deep conversations about company building in the country. Great founders who want to build great companies. Capital is available in abundance. I think you just need to worry about what is in your control. Doubt is this fundamental thing that bothers so many founders. There'll be times in the journey where you will feel frustrated, you will feel out of options, yet you need to have this belief that is almost irrational to other people. Hey, I will make it happen. Some pitch decks are trying to do too much. Like, what do you stand up? You ideally want to establish that you should remember me for. That's when you actually leave a mark.
Before I begin this podcast, I have a small request. I just saw my YouTube analytics and saw that over 90% of people haven't subscribed to this channel yet. So I have a small favor to ask you. If you've ever found value through this podcast, please do me a small favor, hit that subscribe button, ring the bell icon, leave a comment, like those videos, share them with your friends and family who are trying to build a business or just trying to understand how things work. It would mean the world to me if you do that. It allows me to bring on more guests who are trying to bring more value to you. It just makes this channel bigger so that I can bring on more guests, help you answer a question, essentially trying to bring value to you. You can also ask me a question in the comments and I can ask them to the guests or I can answer them myself. So please do me a small favor, hit that subscribe button, ring the bell icon, leave a comment, share the videos with your people. That's it. Now back to the podcast. So in this episode, we have the wonderful host of Indian Silicon Valley podcast, Jivraj. So lovely to speak with you. I've been trying to get you on for a very long time and I finally got you on. And I have a lot of questions to ask because I come from public markets. I have zero understanding of private equity, angel world. So we'll touch up on a lot of these points. But so far, how are you doing, man?
I'm doing really well. Thank you so much for having me on, Akash. Very kind of you and very kind words. Looking forward to the conversation and excited for it.
I've learned a lot about podcasting skills from you as well. Like the reason that I can see that you're so authentic in terms of asking questions, genuinely inquisitive when it comes to different subjects around business. You ask about brand building, different niches. So you get into the details. Like I love that. Like I'm sure a lot of people find value from it and that's why it's so successful. But before we get into all those details, niches, business world, everything, for the few people who don't know about you in terms of podcasting and all the things that you're doing, could you please let them know who you are, what's your background, and what's the journey been for you so far?
Absolutely, my pleasure. And thanks again for the kind introduction. I got super lucky having started the podcast. So I run Indian Silicon Valley, which started about 3.5 years back now. And the way I stumbled upon it was I tried to build my first company right out of college. This was in the on-demand mentorship space. It felt like if we can order food online and we can order transportation online, why can't we talk to somebody online, as in when we'd like to, regarding mentorship? Especially in study abroad. So if I wanted to study at Harvard, can I talk to a Harvard alum? If I have a job interview at McKinsey, can I talk to somebody from McKinsey? So that was the idea. That didn't fly, to be honest. And that's when I realized I know very little about building a company. And I was like, okay, what's the best way to learn about company building? That's when I looked up all the possible resources. So I could repeat every perhaps YC video or Airbnb story that Brian Chesky has spoken with all of the YC partners, because I was just hooked on to all of that content. And then I started to ask the question, hey, Airbnb is good, YC is great, but how can I understand more about company building in India? And that's when it felt like, okay, maybe a podcast which dives deeper into company building in India could be a very interesting thing. I knew at the least I would really learn. If it works well, then maybe more people would. Never did I imagine, to be very, very honest and absolutely authentic, that it would become what it has. Not just from a viewership standpoint, but how it would change the trajectory of what I do. So this is about mid 2020, right? In the pandemic, when I thought of launching the podcast, sometime towards the end of the year, I launched it. And it started to do well. Instantly, I realized that there were more people wanting the kind of depth that I was trying to bring on the table. And I started enjoying it so much. I mean, I'm going to record again in a couple of days. I record in bulk, and I'm still equally excited before each conversation as I was before my first one. And that's the truest testament of what it's done. So the podcast is Indian Silicon Valley. We host startup founders and we host investors. The idea is to ask them deep, meaningful questions about their journey and understand how they've been able to build their companies and really understand the process behind it as opposed to just the journey. So that's the crux behind the podcast. The podcast led me to joining AngelList India, where I joined as an operator. AngelList is like the largest platform for startup investing in the country. And I got super lucky there because I got exposed to this amazing world of great people who were trying to also invest in my learning. So I joined in as the seventh employee at AngelList India, learned a ton from people there, understood about the world of angel investing, and I got super lucky there. And that led me to starting my own syndicate. A syndicate is like a private investing arm. To those who may not be aware, I basically manage capital and deploy it in startups for other investors. That's the very simplistic explanation. This was about 2.5 years back, early 2022. And that's when I started on the journey of investing. About a year back, I left my job at AngelList to pursue investing and the podcast full time. And it's been a great year, a year full of insane amounts of learning. It's been a great trajectory to just be by yourself and learn and be accountable to yourself. That has taught me a ton. The journey is very exponential in nature and loving every bit of what I do. So the short is I try to contribute to the ecosystem with capital, with content, and hopefully with some amount of community by organizing events, by letting people connect with each other and ensuring that I can add some value in their lives when it comes to the spectrum of the startup world.
Quick one, if you haven't subscribed to this channel yet, please do me a small favor, hit those buttons, you know the drill. Your support is the only reason that I've been able to have these incredible guests on this podcast who are trying to bring more value to you. So please do me a small favor, hit that subscribe button, like the videos, ring the bell icon, leave a comment, share the videos with your friends and family who are trying to build a business, whichever platform you're consuming this on. That's it. Now, back to the podcast. So, Jivraj, let's break that down, right? So, you started in Silicon Valley podcast and then it grew. What was that pivotal point that you saw that this could be something? And when even seeing that phase, what was your thought process? Like, what did you want to build from there? Did you want to build something for the B2C segment, or was it just B2B, or was it just for your own understanding of how the startup culture is?
Yeah, honestly, the initial thought was very academic in nature almost, which was to say that, okay, I want to build a company someday in the future. I know there are a lot of people like me who may not have immediate access to a lot of founders and may not have the right ecosystems. So if I can help ask those questions on behalf of a lot of people like myself, then it would benefit people because, in a world where everything is so connected with technology, sometimes we end up making the same mistakes again. I'm sure that when founders build companies, the commonality factor is actually the mistakes that we can avoid. Maybe the
Yeah.
first hire should be in a particular way. Maybe the first round of funding should be at this point in time. Maybe you should approach certain kind of people, and people are unable to reason some of those things out. So my objective was, hey, let's bring this out in the mainstream conversation. And in 3 months, it became evident that more people were caring about this, and this was becoming something. The quality was being appreciated. I've had very little idea on how to, run a podcast, how to do production, how to do editing. I was trying to figure all of that out simultaneously. As you pointed out, it was actually right this setup. I used to do my Zoom videos with actually video off, by the way, because I used to be so nervous that I would read out questions. This is about 3 years back. But then I would, upload audio conversations that I would edit myself. However, in 6 months, it became evident that more people cared about this than me. And I also started educating myself to an extent where this became really tangible. And that's when I formalized the vision to say that, hey, we will stand for authentic, deep conversations about company building in the country. and what I will do well and what I know is I will continue to persevere. And every time, if I get tired or at all frustrated, which is going to be like maybe 1 to 2% of the times, I still remind myself that hey, if I do this for long enough, enough people will take attention and they will
Hmm.
value the good work that I'm trying to do. So I think that's been the objective and North Star, to provide value for anybody and everybody listening, because we're asking for time and attention of a listener, and that is a very, very important thing to ask for. And if you're asking them for time and if they're giving you time, might as well ensure that you are doing justice to it.
Right, right. And what was that moment? Was it some particular format, or was it a particular type of business that you were talking about that you saw, oh, this is getting more attention, let's just focus on that? Or was it just the social media clips that you started posting?
It was just organic feedback. Like there used to be times where I used to, encourage people in my circle. I used to push about it very actively, and I used to like push people to listen. But I think like it stands for a product. It was true for the podcast as well, which is to say that when I started to get organic feedback, when people that I didn't know would come and reach out to me and be like, "Hey, I found this conversation insightful. This was really helpful." That was really, really
Yeah.
nice, and that was the light bulb moment for me. And it also used to be moments of appreciation from guests that I've hosted, where they would acknowledge that okay, this was a different conversation, I really enjoyed it, and this was something that I'm not usually used to. Those were cues that would make me reinforce the belief that
Hmm.
something different is happening here, which is worth pursuing. And that's
Yeah.
when I was like, okay, let's keep at it and let's continue doing this for
Yeah.
as long as we keep enjoying it.
Yeah, now I can resonate with that story because I am a little bit over there. Like I've had a few people reach out to me who said that hey, I really like this guest, I really like this episode, so I can understand like okay, these are the little cues that we get. Apart from that, like we're not that experts of understanding social media, how the algorithm works. We just focus on providing value. Now, uh, we'll talk about more about podcasts, but I also want to touch up on the business. Like you're into the VC world, you've worked at AngelList. Give us a sense of something that you learned from there in the angel world that you thought, okay, now I need to do something on my own.
Sure. Angelus was really instrumental in shaping my work persona. There was a lot of responsibility that I got early on. So, as an operator, what I learned was hey, when you are given responsibility, you have to own it, you have to own the result, and you have to just fly with it. So, I actually took a lot of accountability in the work that I was doing, and I was really proud of it. And I would ensure that whatever I'm trying to do is done in the best way, because it came with a lot less micromanagement and a lot of ownership given to me. And that as a youngster was very encouraging. So I think that style of leadership really suited me as well. And it shaped my understanding of how to conduct business. When it comes to the angel world in and of itself, I realized the appetite on people to take risk. That was actually very new to me. But when I saw investors take, investments in very risky startups, it was really
Hmm.
alarming for me initially, but also made me realize that there is a risk appetite for something like this as well. So I really grew strong admiration for something like this. And then it was the founders. I saw some incredible founders starting up in very different spaces each new day. When we were dealing with multiple investments, we would look at some computing company, some consumer brand, some apparel brand, some B2B software company, some fintech company. And that diversity was very, very encouraging again, because it used to like it's the most intellectually stimulating thing you can do. So I think the combination of all of these three made me realize the importance of entrepreneurship. I truly
Hmm.
believe that when you're doing something entrepreneurial, your background does not matter, and what matters is if you're providing genuine value to your stakeholders. And that became true with my parallel podcasting journey as well. I knew nothing about making a podcast until I did. I knew nothing about building a startup related podcast until I did. Similarly, that was so true for entrepreneurs. Ritesh Agarwal of Oyo has probably never, like, has definitely not run a, let's say, hotel before, right? But he built the largest aggregator of hotels in the country and the world, second largest in the world. So I think it's very, worthy of appreciation to know that entrepreneurship breaks all odds and it respects value addition. And I think that's something that motivates me a lot. And Angel is that way gave me a lot of perspective on all sides of the spectrum. For me as an operator, for me as an individual, and the angel world, the startup world, and gave me a lot of perspective.
That sounds amazing. We hear a lot of these stories. It sounds glamorous on the outside, but it's really tough when you actually do it. Right? You're going through that journey, like going through that self-doubt, going through all this little bit failures that we saw, hiccups, setbacks, and then you understand, okay, this is something that I should have done, and then you kind of take those learnings and build something. And Jivraj, can you give us a story? Like you talked about risk appetite, right? I wanted to ask you, but I didn't want to stop you there. Can you give us a story of something that you saw? Okay, this is something that people would actually pay for and invest in, even though the founder doesn't have any sort of experience, but they have this idea, a vision in their head that this something can be built.
Ah, I remember a company that was trying to do, um, build a bank for creators, and that was like a really large sort of vision. Considering in the US, neo banking became a culture. So everybody was saying that you take the banking stack, you build a layer of customer experience, and you verticalize that for persona. So for the youth, there's a company called FamPay, which is doing really well. Then it became a theme for, let's say, elderly as well, because a large population in the US is actually above the age of 55, 60, and for them a separate banking stack perhaps makes sense. Similarly, people started to wonder if for freelancers and for creators as well, there should be something there. This was a major trend in the 2021 sort of wave of the creator economy. And a founder was building in this space in India, seeing that we'd build a Khata book for creators. We'll start, helping you monetize and track your invoices, and then we'll build a banking stack on top. That company eventually had to pivot into something else, but this is a great example of saying that, okay, here's a trend, this is proven someplace else. The founder did not have a background in the creator economy, but was a great builder. He's still a very good friend, and that's how the investment got made. That was actually my first investment as well, and I saw a lot of people put really good faith. He had to pivot. He figured out a bunch of things later, but it's a great example to know that the risk appetite for others to back him, and him to also pursue such an audacious idea was really helpful. Also, to have the wherewithal in 8 9 months to say that, hey, this is not working, we'll try something else. So they pivoted to something else, did not give up, tried multiple experiments before sort of eventually concluding the story. So that's the closest I sort of remember. That was immediate to say that, hey, the risk in this, like, you have to reward yourself for the risk, because you've been able to take that step. So I think 50% of the battle is there, but also then seeing that all of these risks may amount to something not very significant, but it takes one step to actually just like go and boom.
Mm.
That's the other thing about investing. You can go wrong 8 out of 10 times, yet you can win big because the 2 out of
Yeah,
10 work really, really big, which is unlike any other
yeah.
sport or profession I at least know of, because it's very difficult. In most things, you have to win a majority of the times, if not all the time. Yet in investing, you could lose a majority of the time, yet win big in aggregation.
Yeah, yeah. There's a very interesting learning there. Like you talked about pivoted. I mean, from your understanding, you've worked with all these amazing founders. You've talked to all these people. Uh, what makes a startup successful? That's the second part of the question. The first part of the question is, when do people actually know we need to pivot? Is it a time frame? They need to track revenues? Because I'm sure somebody out there who's maybe in the similar place right now and they don't know if that business or venture is going to continue in the direction that they were planning on, and they maybe want to pivot or maybe want to switch to different things.
Yeah, I think pivoting requires a lot of intellectual honesty, because I think you go through this conundrum of being married to the fact that, hey, we should do this. This is the approach we're following. And you're always waiting for that point when it starts to click, right? But you have to
Mhm.
have this insane amounts of honesty, because honestly, when something's working, you evidently know. When something's not working is the point when there is doubt. You have to know if that doubt is real doubt, or is it a factor of you just being very associated to the outcome. Because when
Yeah.
you're too associated to the outcome, you get blinded by the fact that this may work. But if you're
Yes.
honest about it in an objective level, then you know that it's not working and that you have to try something else. And I think the best founders in my vicinity are very honest about the fact that, hey, we tried, yet it did not work, and that is why we have to try something else. That something else usually becomes a pivot. So I think one of the most important factors is just intellectual honesty. It's actually a borrowed concept. I'm sure I heard somebody else put it in this exact manner, and that made a lot of sense for me.
That's an amazing answer. Now, the second part of the question was like, what makes a startup successful? Is it the founders? Is it the product? Is it their marketing? Is it something that their X factor?
I think what makes it, it's a combination of all of those that you mentioned and many more, and a great combination of luck, I must say. I think it has, for something to be successful, so many things have to fall in place. But I think what hygiene will be is, I think you need this drive which is very very tangible in nature, right? You can't build a startup because of external forces. I strongly believe that your factors to build a company have to be very internal in nature. It could be the fact that you want to generate a lot of strong value for your stakeholders. You want to tackle a problem, you want to be challenged, you want to be stimulated, you want to hustle, you want to generate wealth. It could be any of those, but it requires this insane amounts of drive that does not rely on the outcome or other people around you. Because if it does, I think it just falls short very fast. Building a successful company means being in it for at least 10 to 12 years at the least, which requires a lot of day-to-day grind. And you can only pursue that if you're internally driven. Nothing more can drive it. So I think that is the utmost crucible of building a company. And I do think the second part is the market in and of itself. I do think if you're strategic about what you are trying to build in what space, there's a very common saying that great founders in a bad market make for a not so great company, or and that okayish founders in a great market make for a great company, because
Yeah.
so much of what you're doing depends upon the market in which you are trying to build. So I think that's the other bit. So if you have that drive and if you're conscious about the market that you're trying to build in, you're more often than not, you can build a large outcome. It's very simple, yet the difficulty is in practice. The practice of 10 years of pursuit of being driven without achieving the outcome is just so difficult, because your progress is also not as tangible, right? Like people talk about overnight successes, but those overnight successes are 10, 15 years in the making. So yeah, it's difficult to practice. It's one of those things, but the founders are able to pull it off in an incredible manner.
Yeah. Do you know Guy Kawasaki?
Yeah, yeah, of course, yes.
Last month I spoke with him. He was in the same place where you were at right now. I was asking him the same question, and he said it just takes a lot of grit. That was his entire answer. And like you said, the same thing. It is all about like you need to have this insane amount of drive, and it makes so much sense. Now, let's take a step back, Jivraj. You mentioned by 2021 you understood like this is the landscape of Indian startup ecosystem right now, like post COVID, and you saw a lot of these people building startups in like digital space, and we see all these trends. Like I'm from the stock markets world, like the same thing happens there also. We have these patterns, right? We have some sector does well, and then a different sector does well. Right now the oil marketing companies are doing well, and last 6 months ago all these power companies are doing well. And I think we have the same thing in the entire business world. End of 2021 or mid 2021 we saw a lot of crypto companies doing well. From 2021, I think first quarter, till third quarter of 2023, we saw this entire pattern of crypto blockchain, right? And then a lot of these startups were built there. At the end of 2022, we saw these AI companies taking over, and that pattern is still here, right? We are still living in it. Like, it's taking the world by storm. Like, every day we are hearing new companies being born. Should people chase those patterns, build a business around something that's in that trending theme, or something, or should they chase like their own drive, something that drives them every day regardless of the pattern, something that may not succeed but it's something they have it innate in them?
Yeah, I definitely think the latter, purely because, as I said, drive needs to be very internal in nature. The moment, by the way, you try to catch a trend when it already has become a trend, you've already missed the bus. So that's the other part. So it wouldn't be very fruitful. Um, uh, the best people who are able to catch on trends are just great at predicting the future. And they've probably caught the trend before it became one. So if you're one of those, I do think it's helpful to then intellectualize the process and be like, hey, I can predict that in 10 years, this is going to be the future. Can I do something meaningfully large in that space? There's a couple of really good examples. Balaji Srinivasan is a great example in the crypto world. He has been able to do that predictably well. Of course, the founder of OpenAI is another great example where Sam Altman has been championing AI for a long time, and then he's also been in alternative sources of energy where he's invested, and there's a lot that he's been able to say. Vinod Khosla was talking about AI back in the 2000s. So this is like 10, 20 years before it actually became a thing. So if you're one of those, I think you should go out there and build according to the foresight that you have. But more often than not, if you should be the one to follow your internal curiosity, because that will take you really far, and that will not depend on what's happening in the market. So you will be able to build independently. And if you are able to build successfully your company, everything else should usually fall into place.
That's really true. Now, what about myths, Jivraj? Like, we hear all these people say that the only reason a lot of people don't start businesses because they say they give themselves an excuse that they don't have funding. You're the right person to ask, do we need money to build business? And can we build something from scratch with no amount of money, yet make it successful enough to raise money?
Absolutely. I think to start a business has never been easier than it is today. And I think the barrier to entry of starting a business only reduces with every new day in today's world. It's another story that to build something successfully, rather grow, is becoming increasingly difficult because we're in a world of a lot of clutter, a lot of companies being started. But to start a company, you could go on the internet today, you can build AI-led websites, you can build AI-led projects very, very simplistically. You can start a Shopify store if you want to sell something. You can start drop shipping without holding any inventory to build a consumer business. So money and capital in and of itself is the very second or third priority you need to worry about when building a company. Is it a requirement for some businesses? Yes, but that does not stop you from starting anything. You can prove your hypothesis. You can do very, very early experiments. You can prove consumer demand with something else and still prove your thesis and then raise capital. And capital is available in abundance. There are so many people chasing great founders who want to build great companies. So capital should not be the worry. As somebody who wants to build, I think you just need to worry about what is in your control. If you can do all of that and if you can hustle it through, capital will come in. So I think that myth is definitely a myth. But I also do think you need to be careful about saying that all the flashy things about building a startup are the last reason that you should build a company. You should build a company if you truly believe that you can and you will be able to do this for at least 10 years and you can generate value for people around you. If you think it's because you want to be your own boss, if you think it's very flashy, if you think you'll generate wealth, I think all of those are bad reasons to build a company. And I sometimes hear people say that, and then that's okay because a lot of education is happening when we make superstars or founders around us, which is very right. You will also impact and influence a certain portion of the society in a way that it seems flashy. But flashiness is the last reason to build a company. And I think that's also very important to note. Or the fact that you can raise capital. That's the other side. Because capital is chasing founder, that does not mean you can start a business because you'll be able to raise money. I think everything else gets figured. As long as you are in it for the right reasons, you can persevere for 10 years. And that's just a 10 years, by the way, just a placeholder to say that this is a tough journey. So whatever that sort of quantum means for you, it could be 4 5 as well. We've seen really successful sort of exits in 3 4 years as well, so I'm sure that is possible. But I don't think you should start out with that vision. A lot of people, for instance, ask me that I want to start a podcast and then become an investor. To be very fair, if I would have started with that vision that I'm starting a podcast because I want to become an investor, I don't think I would have landed here. And
Yeah.
that's the absolute honest truth, in my opinion. I started because, okay, I wanted to, again, generate value by talking and having great, authentic conversations. If that provides value and in return, I can do something more with it, that's great. But if I start off with an ulterior motive that, okay, I'll be able to, network, I'll be able to be a part of great people's good books, whatnot, right? I don't think that works well. So, yeah, having that clarity is important, in my opinion.
That's true. Uh, Jivraj, what about when we take any funding? Like it's although it may be required when like we are in that initial stage, but that is we kind of push it inorganically, right? And when we do it organically, like the market rewards you, you use internal accruals and you build your business. Would you, being in that ecosystem of startups, would you say inorganic growth is bad, or would you say that it's okay to use inorganic growth but still have a sustained organic growth that tells that you have a machine that's working?
Yeah, I think inorganic growth on top of a great product works. So I think the fundamental question to answer is, why are you doing that growth? Because the product's working. If you need to build an engine that serves you well on top of that product, that's great. But if you think inorganic growth will solve the inadequacy of a product, that will not solve it. And I think that's money not utilized well. So, for
Yeah.
instance, a lot of companies which don't have product market fit, which is a term which is very commonly used to define a company.
Can you explain that for the people who don't know? Quick one, if you haven't subscribed to this channel yet, please do me a small favor. Hit those buttons. You know the drill. Your support is the only reason that I've been able to have these incredible guests on this podcast who are trying to bring more value to you. So please do me a small favor. Hit that subscribe button, like the videos, ring the bell icon, leave a comment, share the videos with your friends and family who are trying to build a business, whichever platform you're consuming this on. That's it. Now, back to the podcast.
Sure. Product market fit is this benchmark that people use to describe companies or a point in time in a company where you have organic demand more that you can serve, right? So let's say you take a, I don't know, you have a coffee store in front of your house and you can only serve 50 cups a day. But if your coffee is so good that people are coming, 100 people are coming every day, and you have more demand than the supply that you can serve, that's a great indicator of saying that your product really works. So your product has found fit in the market, and that is the point from which you can then start inorganic growth, right? So now say, okay, now I know my product works. Now I will figure out my supply for 200 cups. And now I had only 100 people, but now to get the additional 100, I can actually spend money because that inorganic growth is going towards a great product, which I validated at first. So I think the short answer there is, if you have a working system and if you have signs of product market fit, utilize the money and capital to push towards inorganic growth because the product works, but don't rely on inorganic growth to tell you if the product works or not, because that will almost always lead you in the wrong direction.
That's can you give us an example of the some of the best product market fit companies that you have seen?
I think Airbnb is the best example I know. It's also one of my favorite companies. It's also the founder of which company, my bucket list for my podcast. But I think Airbnb was such an innovative solution when they came up with it, and it was so disruptive for its time, that when they came up with the concept that, hey, everybody has a home, an inventory where people can come and stay, right? There are two people staying in three-bedroom houses. Can that unutilized inventory be opened up to other people? There's this common notion that perhaps you wouldn't open up your home to a stranger. However, once they were able to prove that this is possible, so the day they figured out they had product market fit, there was a conference happening in one of the cities, I think in SF, and they put up B&Bs around, and they had people come in other people's houses and stay because hotels were
Hmm.
all overbooked. And
Right.
that phenomena proved that, hey, there is definite demand for this, and then everybody wanted to host people, and that was the
Yes.
best to say that, okay, there is strong product market fit. In the recent times, I think the quick commerce wave is a great way to understand product market fit as well. Initially there was a lot of question to say that, hey, do people even need a 10-minute delivery, right? But now people are just so dependent on it, right? People cannot,
Hmm.
the alternative experience of going to a shop, negotiating price, getting a product, coming back, which is a 20-25 minute process at the least, is just not good enough for people, which is why there are three companies doing incredibly well, and people are fighting for who can deliver the fastest.
Yeah.
So I think those are very good examples of saying that, okay, you start off with a hypothesis, you bring that in the market, you test consumer behavior, and if it works, and if you have good science to say it works, then you spend money. Airbnb today is a $100 billion company. It's one of the best successes in our generation. It was started in 2008. It's been 15 years. Their like free cash flow last year was about $4 billion. So they've returned all the capital that they had raised through free cash flow as a company in the last 2 years of being profitable. That's the
Yeah.
very good example of a venture-backed company. And hopefully in India also, like with the success of Blinkit, Zepto, Instamart, I think a lot is going to happen in the space as well. Yes.
Yeah. Did you read about Airbnb's story? Brian Chesky shared it recently on the Diary of CEO podcast. He, if you saw, like, they were trying to raise $150,000 at $1.5 million valuation, and they said that there is not enough market for this business.
Yeah, that's the thing about investing, right? The thing that I also juggle with is some of these most disruptive ideas will seem so unbelievable at the start, that you have to be very calculated in knowing how you reject some of these ideas, because your pattern for what does not work is usually very strong. And so you are very quick in terms of, let's say, rejecting ideas basis lack of market size, maybe consumer behavior, things that you may not be able to envision to the fullest. But at the time, I think the only drivers of force must have been the founders in and of itself. So that could have been the only tangible way to support like disruptive founders. But yeah, I remember so many people got Airbnb wrong. I remember the way they persevered. There's a story where they mentioned that they actually sold cereal in different boxes. And they called it something funny, and they got, that was the way they earned some 30-40 thousand dollars to keep the business going. It was a very,
Yeah.
very good story and an incredible company.
Yeah, that's true. Uh, Jivraj, I went through your website and I love the principles that you have written, right? And I quote, positive obsession is a great indicator of intrinsic motivation. Like when we feel it, we should pursue it. Can you talk about that? Because I think there's a lot of, you kind of have had a lot of things done and then you came up with this.
Yeah, I think, like Sam Altman recently in a podcast mentioned, like, how do you know something that you should pursue? And then the line was that when you can do something that feels like play to you but feels hard for somebody else, that's the time you should pursue it. And in my journey with the podcast, with investing, with what I do otherwise for work, I felt all of these things bring me so much energy. It gives me so much uh, it gives me a great gratification factor, and I want to pursue it all the time. And then that is what leads to the obsession, right? Because with every new episode, I'm obsessed to say that, okay, can I make it better?
what am I doing wrong? What is the feedback that I can take so that I can get better? And that's where I feel that obsession really plays in mind. And if we can find something that we thrive in, I think that's the best way to proceed. I recently read a book called Drive by Daniel Pink, and he mentioned that there are three factors to drive. There's autonomy, there's purpose, and there's mastery. I think I was able to luckily find all three of those in my podcasting journey, which is to say that, hey, there's a lot of independence in what I do. So there's autonomy. There's a purpose of saying that I want to add value to the ecosystem, to people like myself who did not have support and want to build a company. And there is this mastery. I want to become the best possible host I can be. And that
Yes.
really drives me in a positive direction. And that's where I feel obsession also gets combined, because when your drive is high, you are obsessed and positively. I think the negative form of obsession is when you are too obsessed, when it blinds you. But when you're positively obsessed and when you can recognize it, I think you should just hold on to it, because it will give you a lot of joy during the process, as opposed to just wait for an end outcome, which will be there temporarily. In my journey also, I've been fortunate, and it's a very evolving one. I really hope this will only keep getting better. There have been times that I've been, acknowledged by other people, and by, let's say, maybe a recognition or two. And in those moments as well, where I've felt overjoyed, I've honestly felt uh, similarly happy throughout the journey as well. With each new episode, with each new release, with each new preparation towards an episode, it just feels very gratifying. And I think that's the feeling I hope a lot of people dare to sort of find and then pursue. And if you found it, I think you should have the courage to pursue it.
I love that answer. We have a second one: borderline irrationality when it comes to having big ambitions.
Yes. No, I think, this is a borrowed one from all the guests that I've hosted on the show. Doubt is this fundamental thing that bothers so many founders, because people will be out there telling you that, hey, this is not going to work. There'll be times in the journey where you will feel frustrated, you will feel out of options, you will feel like, this will not work. Yet, you need to have this belief that is almost irrational to other people, that, hey, I will make it happen. I remember early on in my podcasting journey, I wanted to host the founder of a unicorn, a very famous company. And I was told by an analyst that, hey, this person will not be on your podcast, right? But you need to have that faith that, okay, no, you will
Yeah.
pull it off, right? So I think those are small examples of saying that when I was starting the podcast, I was leaving a job and I didn't have a job for some time. And I was still relatively young, right out of college, and there was a lot of doubt. So people around me mentioned that, hey, why are you doing a podcast? Why aren't you monetizing the podcast? There's a lot of opinions. And by the way, like, most of these people are well intentioned, but they are also very risk averse, which means that they are unable to envision something that you are probably envisioning. So you have to have that optimism, almost to the extent of irrationality to other people. And if you can pursue it, I think it just pays dividends. You have to just be in it for long enough until you see the results. And I think that waiting period will be sucky, but if you can pursue it, I think
Mm-hmm.
it pays a lot of dividends, and it helps.
Yeah. What's your like when you have an idea that you want to do something, do you kind of journal? Are you writing it down? Like, what's your process there? Because I think you have a lot of ideas every day. Like, if you want to bring on a new guest, if you want to like work on a new project, if you have a new investment, like, are you journaling? Are you writing it down? Like, what's your process?
I think I take notes very quickly these days, and this is also an acquired habit. I heard it from one of my seniors at work, and whenever I get a thought, I'm either noting it down on a personal group that I have, that everybody has with themselves on WhatsApp,
Mm-hmm.
or on my notes. I think my notes app is one that I started to use very actively as a journal as well, and started to note down most things that I can't describe, like things like also, hey, how do I derive joy? Like, what are things that I don't want to do? What are things that I do want to do? If I'm reading a book, also, it's usually in my notes. So I think, yeah, I think journaling is one. Just writing down things to solidify your thoughts is one of the great hacks in life. And I've been practicing that actively more and more lately, because otherwise, I mean, thoughts are cheap, right? Like everybody has
Yeah.
them. Action is costly, and you can only act if you've been able to maybe systematically process your thoughts, ideas. And hopefully, I've been able to do that, and I continue noting them down so that someday something more disruptive comes along and I can pursue it.
Yeah, that's fantastic. Like my process is not as structured as yours. So whenever I get an idea, I just act on it. A few weeks ago, I was watching a podcast of Guy Kawasaki, and I went to bed. At 1:15, I woke up and I realized, hey, why didn't I reach out? Because when I was learning from him, I really liked his way of saying. I liked his ideas, and then I emailed him. And then 2 weeks ago, I heard back from him, and then we recorded a podcast. So I don't have a structure, so I just act on it. But I want to have a structure because I can't just act on it in the middle of, let's have an idea right now. I can't just act on it right away. But that's great. Like we should have a process. Now,
Absolutely. And congratulations. I think that's amazing. And that goes to show that, yeah, we should act on it sooner than later. Otherwise, these will always just be ideas.
let's talk about. I have one more question on content and podcast, and then we'll go to your investing side. When you started building a podcast, right? Did you think of building a personal brand along with your podcast, or was it just about podcasts? Because I mean, we have a lot of interests. Like when you think of, I didn't understand branding. Like I didn't know what is a brand, but then I understood. Okay, you talk about your personality, you talk about your interests, and then it becomes a personal brand. That made sense. And I think when you started, did you know how to build a personal brand, or did you like learn it from something? Did you read a book? And what was your plan initially?
No, absolutely not. I mean, truth be told, I had no idea about how to build a personal brand, or I wasn't even familiar with the terminology, to be honest. I found it fascinating, the idea of putting your thoughts into the world and having people respond to it, but I had no personal sort of ambition for it. And to date, I think the reason I pursue personal branding the way it's conventionally defined is because I feel it will help the podcast. I don't know if my personal drive is such that it motivates me to get applause, right? I would like it, and I would find it gratifying. I would find it thankful, but it's not something I consciously pursue. But somebody once mentioned to me after a podcast, actually, and that was very transformational. This was around the 25th episode. I'm at 200 for context, so about like very early in the journey. But this person said that, hey, Jivraj, remember that when a listener is coming onto your podcast, the first time they come onto your podcast will probably be for the guest because the guest is more renowned. But remember that they will stay back for you, and that's when they will come back for another episode. And that made me realize that, hey, the difference between me and an anchor or like a interview host, right, is going to be that I can actually have a conversation. I think that's going to be the difference. And the difference will be, hey, I will never try to take the limelight. I will never try to answer the question, but I will still bring my authentic, curious self on the table when asking a question. And that becomes my differentiated personality. And then in turn, my learnings, if it can benefit the larger ecosystem, I will put out into the world. So whatever I do in the form of personal branding now is, hey, can I bring my authentic self to a conversation? And if that people like, that's great. If they don't, I will take feedback and understand what people like so that I can become more attuned to what a listener would like to understand and be. And the second part is, if I'm learning things from the podcast and there are ways to repurpose it, it would be injustice to a guest's time and the podcast if I didn't repurpose it well enough. And that's when I will try to do more content by myself, because it makes sense to utilize the podcast as a way that it provides value in multiple different forms, not just those that 1 hour, that 90 minutes. Can it be more everlasting than that? And if it means doing a reel on it, if it means doing a LinkedIn post on it, or anything else, I'm happy to pursue that.
Let's go to investing, Jivraj. Like you've worked in all these big companies, you've worked with a lot of founders as well. I'll ask you a series of questions about private equity because I think it can be helpful to a lot of people who are trying to pursue that path. What is, if somebody comes to you with a pitch deck, like, and they ask you, like, hey, Jivraj, this is my business, this is my idea. What is your investing criteria? Like, can you give us priorities?
Sure. And just like, I mean, for the record, my area of competence lies in the world of early stage investing, which is venture capital, early stage primarily. Private equity is the larger bucket. What I primarily look at are, let's say, three things. The traditional definitions will be founder, market, and timing. However, within those, since these are so general,
Founder, can you come again? Founder,
market and
market,
timing.
timing.
Yes, I'll come to all those three. Founder is very generalized. So if I had to go deeper, the couple of cues that I look for are, as I mentioned, and this might be reiterating, but I look for an insane amount of drive. I look for strong insights. A founder will be able to tell me things that I usually don't know. So while I come from a finance background, if they are building a fintech company and if they're telling me things that I already understand, that may not be the most accurate representation of what you are doing, because usually when you're on ground, you are able to share more about a company than I probably can learn, right? So the way I define this
Hmm.
is, can you tell me things that cannot read about? Because that's the impact of what a founder is doing, right? So are
Yeah.
you talking in insights? Do you have drive? And maybe past experiences that prove behavior that is more attuned to be a founder. Are you a self-starter? Do you take ownership? Can you take initiative? Have you worked in teams before? Have you led teams before? Can you be a good salesperson? Because so much of what a founder does is
Hmm.
actually sell.
Yes.
I think that's the founder ambit. In terms of market, are you going after a fundamentally large market, or are you creating that market? What are your insights on how global trends have shaped, or rather how macro trends shape? Do you have a worldview around that market? Because if you're too, I mean, also this is, a paradox. Some founders really thrive in just knowing their space incredibly well, while some other founders who have a worldview of the market will be able to define levers in the business better. I prefer the latter. I prefer that you as a founder have a worldview on how things are shaping, have a worldview on, okay, what the macro levers in the business are, and then you can effectively build a strategy towards it. So I prefer that. That's on the market. And then the third is timing. Timing is usually a factor of, hey, have you studied what the competition has done in the past, and why are you most suitable to business today, right? Like, let's say a good example is, any company like a social media company, ShareChat, right? Building before 2016 wouldn't have made much sense, because before Geo made internet accessible to so many millions of Indians, it would be very difficult to build a viable social media company in India. And
Hmm.
thus, ShareChat being built at that point was just a very monumental thing. Similarly, let's say maybe payment aggregators. There are multiple examples, but timing is a factor of, hey, do you know your competition? And do you know why it makes sense to be in the market today, and how your
Hmm.
view of the market is in a couple of years? So I think those are the three things that I would look at as a founder. And if you can articulate well, and have clarity around the business model with these 3 points in mind, I think more often than not you stand a good chance at being invested. It's actually, but most people will honestly, like, that's when people falter also, right? In the founder bit, maybe they don't have a lot of clarity on the insights. Maybe they're not as driven. Maybe they're not thought through that idea a lot. Maybe the market that they're going after is not large enough. Maybe they've not understood the landscape very well, the differentiator of the competitors very well, why the timing now should work. So these are all the contras of what will
Right.
not be investable.
Right. And I think that part can be like alleviated, like when you can take advice from experts, like you might be connected with entrepreneurs or people from that industry, and somebody comes to you for advice and say that this is my idea, this is my business, but I also need a strategic partner who can guide me through this process, right? And I think in that period you mostly look for character. And what are your three things that you think are a must have in an entrepreneur? There are characters, in character traits.
That's an interesting question. And one of the things that come to mind that are almost counterintuitive are this ability to ask for help. I think a lot of people need to, get beyond themselves and understand that, and the best founders do, that starting up is just such a difficult journey, right? That you need all the help around you that you possibly can. And you need to have this ability to ask for help. And that also takes me to my second point, this ability to get things done from scratch that you have no idea about. Like you'll see founders who've not been in a particular space really learn everything about that space from scratch. I mean, that's so commendable. That's a skill everybody should have for life, right? Be it on the learning side or on the execution side. And that only happens if you are almost asking for help from all the people around you and educating yourself in a manner that is possible. So I think these are two. And the third I alluded to briefly, which is the sales bit, right? Are you somebody who can actually, from a character standpoint, really magnify energy? Do you really become an energy multiplier in rooms? Can you
Yeah,
make people believe in you, and do you have
yeah,
that magnetism around you, not in a artificial way, in the way that, hey, this is a believable, hardworking, initiative taking person who is driven for all the right reasons, and I believe that person. I will want to bet towards and in favor of that person. If that is the feeling you can leave me with, almost always you've created a great impression, and those are the kind of people you want to work with. As investors, also, I mean, see, you as an investor, you are not going to build a company. So you're looking for people whom you can trust, whom you believe in, and who are outliers. And outliers are people who will make you believe that, hey, this is possible. They will have a vision, they will know what they wanted to do, and they'll be able to back it up with good articulation, to show clarity of thought, right? And articulation does not, sometimes, I mean, this is very basic. However, articulation does not mean oration, right? Articulation just means clarity of thought. Like, are you clear in your thought of the future and what you want to do? And if that exists, I think so much of being a founder gets sorted. And these are all skills which I think in practice as a on a day-to-day level are also very helpful.
what about uh, let's say you have a deal come through, right? So how do you assess your risk? Like, because private equity market is known for like lower liquidity. Like you don't have a buyer every day, right? You have to go through a lot of processes, you have to search for a buyer. And when you have all these deals come through, like a lot of these options, you have limited capital. You can't just allocate the entire capital in those companies and call it a diversified portfolio, even though all those companies are good. So how do you assess your risk in that scenario?
Quick one, if you haven't subscribed to this channel yet, please do me a small favor. Hit those buttons. You know the drill. Your support is the only reason that I've been able to have these incredible guests on this podcast who are trying to bring more value to you. So please do me a small favor. Hit that subscribe button, like the videos, ring the bell icon, leave a comment, share the videos with your friends and family who are trying to build a business, whichever platform you're consuming this on. That's it. Now, back to the podcast.
Honestly, the risk is in knowing that what can go wrong, and many more often than not, things do go wrong. And I think the repeatable process in investing, especially in private investing, should be going in with your eyes open. While you can't mitigate the risk, you can underwrite it. So the risk can be, hey, product market fit is not found. These are the reasons why it will not be found. Hey, future round of funding will come in very late. Hey, downstream capital for this sector may not be available. So you need to understand what are things that you know that you don't know. And if you
Mhm.
can really keep that into account. So one of the things that I try to do, for instance, is I, at the time of making an investment, will note down things that can go wrong, and every 6 months actually evaluate them. Like, what did I think at the time of making the investment versus what is reality today? And then I understand the delta, and that improves my thought process with every new investment. These ecosystems are so young that we also don't have definitive answers for any of those. Like in India, since funds early stage VC funds have not returned as much capital because they've not seen as much liquidity. You don't have definitive answers for any of these, which means that a lot of this will actually get shown in the next 5 7 years. And as that happens, I think the best thing that you can do as an investor is keep your eyes open, be deliberate about the process, and just whenever new information comes to light, not take it lightly, but actually
Mm.
incorporate it as feedback in your process, so that in case you want to, improvise or improve something, you actually can.
An entrepreneur who's trying to prepare a pitch deck, what are some things that people should answer for you, and understand that Jivraj would be having these questions that need to be answered, otherwise I wouldn't receive any reply. So from your experience, what do you think, what are the three basic things that should be answered?
I think one of the things that sometimes founders don't understand is they try to include a lot of things without realizing what they're trying to convey. Like, I honestly believe that any piece of written communication or verbal communication should have a couple of things that they will reinstore, right? Like 3 to 5 points that they want to get into the mind of the reader or the person receiving it. Some pitch decks are trying to do too much. They're trying to explain everything and everything. That does not help. Like, what do you stand out? Like, that's a question you should ask. Like, what are the 3 things, 5 things that I want my reader to remember? If you can clearly define that, so for a founder it could be his size of the opportunity, or insights on the problem statement, or customer understanding, or product, or my progress. If you're trying to say that, hey, I'm doing well on all, unfortunately when you're doing well on all, you're also not doing great in any one. And that's the point that you don't want to establish. You ideally want to establish that I am doing great in these 3 things, and these are 3 to 5 things that you should go ahead and remember me for. And when you can create that
Mm.
kind of recall, that's when you actually leave a mark. So that's one. Two is, when people don't identify their strengths, they follow a standard template. Let's say you're a company which is doing well in terms of product and has great sales, yet you are starting off your pitch deck with the problem statement, with the business model, and you're coming to your progress towards the end. I think that's a wasted opportunity. If I were you
Mm.
and I had a business which had some amount of good sales, I would start with that, because that is my selling proposition. You create recall the way you want to. Nothing is standardized. Like, just because somebody told you a pitch deck should be in a particular way does not mean that's how it should be. You have to customize it basis what your strengths are. And I think that
Mm.
also sometimes founders really miss. So I would encourage them to think about what your strengths are, what do you want to highlight, and then also chronologically present your highlights first, because that will create maximum recall. And the third is, I do feel people miss insights, and they are very objective sometimes. Like Kunal Shah talks about this a lot, which is talking in insights. And I think pitch decks also should contain insights. Like, if you've done 10 lakh worthy of sales and have sold to some 5,000 customers, instead of just writing that, do write that, but also tell me what you learned from that that made you iterate or make the product better, make your selling process better, make your marketing campaigns better, right? That for
Mm.
me is more monumental, because I'm underwriting a company that wants to become 1,000 crore company, right? So the 10 lakhs in the 1,000 crore picture is not very consequential. However, if the 10 lakhs has given you learnings which can help you build that 1,000 crore company, then that's
Yeah.
really helpful. So I would much rather emphasize on the learnings from that delta, from that journey, as opposed to just that journey, if that journey does not mean much. So I think that's
Mm.
the other point that sometimes people miss out. But yeah, I think those are some things which can be really helpful for brands.
Jiraj, you've interviewed some of the most successful entrepreneurs in India, right? Like, and you have a background in all these ventures. I'm going to give you a series of, like, I'm going to put you in a place of a founder right now, so that you understand that these are the things that are ongoing in the market. If you had a capital of, let's say, 5 lakhs today, what business would you build?
Hmm. I would build something for the ultra rich in India. so that my margins are very high and so that I don't need too many customers and so that my proposition is very clear. I think building a business requires high margins, good sellability, and hopefully great positioning as a part of it. I don't want to rely on low AOVs. I don't want to rely on selling to a lot of people because I just have 5 lakhs. So I'll figure out what I can build which has the highest margin and requires me to sell to the least amount of people, and hopefully build that out.
Would it be an internet-based company, service-based company?
It'd be a consumer business. It'd be a product, consumer product.
Mm. Can you give us an example?
Uh, I don't know, nothing at the top of my mind, but like think Ultra Human is a good example. Ultra Human is a company I really like. Ultra Human is doing about 300, 400 crores in revenue. They're a company that built a wearable that helps people track their health, their sleep. They sell at like 30,000 a ring, and that I think it's valued by some of the smartest, sharpest people in the world, and people are willing to spend on it, right? And it's very high utility and good margins.
Mm.
So yeah,
What if you had a capital of 10 to 20?
I'd still build that. I mean,
Still build
unless I
that.
have capital in the multiple crores business, in which case I think social media has not been reformed, and everybody who has capital would like to build that, I think, which is why the richest person in the world is building Twitter again. I think that's
Uh,
one that you go ahead and build. But if I have, if I have multiple hundreds of crores, maybe that. If I have a couple crores, then maybe I'll build a B2B business. I'll actually build a B2B services business because I think, again, gross margins are high, selling is more predictable. You are able to extract benefits from building the product once, but customizing it for other folks. So I think those things catch my eye better as a builder.
Yeah, I love B2B services business. Like those are the major things that I track when I'm looking for investments in the stock market. I was looking for a mid-sized, mid-cap company in that space, and I found like Cyient and Cyient DLM. Like those are amazing companies. Although this is not about stock markets, I'm not trying to recommend anyone, but those are the things that I like. And yeah, I think I should clarify that this is not an investment advice. Now, uh, okay, you already mentioned the next question was if you had access to investors, but you said you'll build the next Twitter. Like, yeah, I would want to see that. So, yeah, all right. Now, I have one last question, Jivraj, because then we'll wrap up this podcast. But this one is for people who are like me. Like, I am very new to private equity. I don't understand it. Like, I've read about it. I understand like this is how things work, but beyond that, I don't know what goes in the background. If somebody is in that place and they want to get into private equity space, what should be their first step? Like, should they like read a book or something? Should they reach out to VCs online and then learn about it? Should they move to a different city? What would your advice be for them?
I think start with resources. Start with understanding other businesses, because that's the crux of like private equity, right? Like you understand businesses because of your sort of understanding of the stock market, right? That will
Yes.
anyway come to use when you're in the private world as well. The understanding mechanisms of the private equity economics can always be learned. Those are learnable skills. But what is more intrinsic is, do you love different businesses? Can you understand founders? And do you like it or not to begin with? So I'd start there by understanding a diverse range of businesses, and then by understanding the content around venture capital. I think there are some amazing podcasts like these, and hopefully like mine and many more in the world. 20-minute VC by Harry Stebbings is a favorite of mine, that you can check, which talks about the investing world, where you will learn a lot. And if you then find it fascinating, then you should talk to somebody to understand and give you more direction as to what are specific things you should go into. So yeah, I think that'd be my understanding of it.
And if somebody wants to do a deal with you, how can they reach out to you?
I'm mostly very accessible through LinkedIn, Instagram, WhatsApp as well, email as well. So please do. I mean, I would love for you to share any feedback, to figure out ways in which we can work together. And if I can be helpful in any way, please do reach out.
Right. This was a fantastic podcast, Jivraj. As somebody who's I feel like my job in terms of stock markets is to just observe businesses, read about businesses, analyze, read commentaries, listen to management calls, and make investing decisions around that. So, if you nail it down to skill set, I'd say my entire job is observing and listening, right? And like as somebody who's been like following you, watching your podcast, I feel like you're doing an incredible job. Like I love your podcast. You're so authentic, and like I feel like you can't fake authenticity, and it speaks for itself. I mean, you have been very successful in the podcast world, and I wish you so much more success. Yeah, I mean, this was a fantastic podcast. Any last few thoughts that you'd like to share with your people who are listening to you?
No, I mean, before that, I think you've been very, very kind. This means a lot. I mean, as a podcaster, I strive to ensure that my listeners can receive the most optimal experience. And if I've been able to do that, that always feels great to hear. So thank you so much for the very, very kind words. I love this chat as well. It was very, really very organic, very interesting. And I also kept thinking throughout, as sometimes I say as a podcaster that my North Star is to make the guest think out loud, because when they are thinking
Mm,
out loud, they'll almost always give me something original in nature. And
right.
that's really lovely. And I can say that, you achieved a lot of that in today's conversation. As a last, no, I think there's one concept that I really like. If you never try, you never know. And then the quote by Vinod Khosla, which says, "Try to fail, but never fail to try." He quoted somebody else, but I remember it from his conversation. So I really think that if you're listening to this, you made it this far, and if you're waiting to try on something that has been on your mind for a long time, I mean, hopefully this is a signal that you go and try it, because I do think great things can happen if you try things that you've not tried before but want to.
Amazing. All right, Jivraj, thank you so much for your time. This was lovely speaking with you. Have a
Likewise.
great evening.
Thank you so much, Akash. Lovely speaking with you.